Alright, what's going on YouTube? My name is Tyler Self, and it is that time again, time for this week's update of my drip portfolio. We've had some pretty big changes over the past, and I've decided that I'm going to try making this a weekly series, so that instead of monthly, I originally wanted to do monthly updates and just show y'all kind of how everything is going, but I have since decided that a weekly base can be definitely more doable for me. I feel like it's something I can definitely do and would like to do. But before I go ahead and get into how everything has gone over the past week, let's go ahead and look at what changed since the last video. So you can see right here I actually made a pretty significant shift in my portfolio. Let's go ahead and dive into what I actually decided to do. I sold out of quite a few different companies and actually invested in several other companies. So let's go ahead and look at the differences. Right here I have the foundation pie, which originally I had SCHD, BST, and also SCHG, which is the large cap growth ETF. I actually decided recently to get rid of that completely and go into the SPYG instead. It's pretty similar. I felt a lot more confident with the SPY growth ETF more so than I did the Schwab ETF, so that's why I decided to do that. I also did edit the allocation, so I have a little bit more of it actually going into SCHD and BST more than anything else. I realize it's pretty technology based, this portfolio is. A lot of these different growth companies are technology companies. I'm fully aware of that, and I personally really do believe in tech. I think there's a good future for it. The next big change is actually in the tech category. I added a new position, and that is Nvidia. Nvidia was a stock that I was looking to get into for quite a while, and it's actually performed exceedingly well since actually purchasing it. You can see just in the past week, Nvidia alone is up 6%, and I'm super happy with it. Definitely going to look to continue buying the dip on these tech stocks and just watching them as they grow over time. I would say that tech is more of the growth focused area, so I'm really trying to spend most of my investment with these companies instead of just dollar cost averaging. I do try to kind of tend to buy the dips when I can. And again, because this is a dividend growth portfolio, we're looking to buy stocks at a relatively affordable price, hold them over longevity, and when the stocks actually go down, that is a good time to buy, because when you do so and the stock eventually turns around and starts doing better, that dividend that you get will be more. Next category that we have here is consumer. This is probably the biggest sector where I've had a lot of different change. You can see some of these companies have done good, some of them have done really not too good this past week. It is unfortunate, but I did add a few new positions. Of course, I have Costco, Procter & Gamble, Coca-Cola, Disney, and Home Depot, but I did add two brand new companies. I added Colgate and I added Leggett & Platt. Both of these companies I definitely see some potential for in the future. They're at a relatively decent price at the moment, and I felt pretty confident adding them to my portfolio. I think the next few months to come, we will see a turnaround in these prices. I think that it will begin going back up relatively soon. All right, next category we have is the real estate sector. Again, pretty similar. I did sell out of Store as well as Simon Property Group, so that leaves me with Vici, Realty Income, and MGM Growth Properties. I did add a new stock to the portfolio, and that is Good, Gladstone's Commercial Core. They obviously, you can see, have not done very good in the past week. They are, however, a monthly dividend payer, and I've kind of just looked into this as buying the dip, trying to see if we can get those monthly dividends coming in pretty quick, similar to Realty Income Core. Just again, trying to focus on building my total valuation and really just trying to build my share count in all these different stocks, because I believe over time, again, buying these dips and continuing to dollar cost average into these businesses will pay off in the long run. And real quickly, before we actually go any further, if you want to actually check out this exact portfolio that I'm running with so you can track the progress for yourself, I have a link down in the description below so you can check that out, as well as I have a link to my personal Roth IRA portfolio as well. If that's something you'd like to kind of monitor, I do update those links every single video, so stay tuned for those. And if you're ever curious about how the portfolio is changing, always resort to my most recent video because that is where I have the updated links. The next sector we have is energy. Energy, I didn't really change anything. I still just have Chevron Mobil and Exxon Mobil. I still have Exxon Mobil and Chevron Core, although I will say Exxon Mobil is currently, I believe, my best performing stock in all. I think I have about a 20% gain on Exxon Mobil at the moment. So I may actually look into selling because it is a little bit overpriced in my opinion. May look into selling and then rebuying when the price goes back down. But I did make that mistake with Avi. It was at its all-time highs. I was up about 35% or so overall, and I ended up selling out, and the price continued going up. So if I had stayed in, I probably would have made about like maybe up to 40 or even more gain just from owning it. So I'm kind of in the boat where I don't really want to make that same decision, but we can see that ExxonMobil is down in the past week, which is a little bit unfortunate. Next sector we have here is financials. I don't have a whole lot in financials, but I will tell you exactly what has changed. The biggest thing that happened was I did sell T Rowe. I gave up on it. I was overall down 30% in that particular holding. I really wanted to hold out because I thought maybe it would turn around, and I'm sure it will at some point, but that just wasn't really a risk that I was willing to take. So I did take that out of my portfolio. Obviously, I still have JP Morgan Chase and I still have Wells Fargo, but I did go ahead and add Bank of America as well as Ally Financial. Ally Financial mainly because it's a company that I really believe in. I believe that the online banking will be the way of the future, and Bank of America mainly because it was at a pretty fair valuation. And we can see just in the past week, the finance category is actually doing really good. We can see all these holdings are up over 2%. Ally Financial being the smallest of those. So super happy with those results. Super happy. All right, next on the list, I did go ahead and add some healthcare back into my portfolio. As you remember from the previous portfolio, I did not actually have any healthcare holdings. I did at one point have Johnson & Johnson, but I decided to sell it, as well as I also had Pfizer at some point and decided to sell that as well. I already talked briefly about the whole Avi situation, but that was another holding of mine that I had really great returns, decided to sell, and ended up regretting it. So I'm really thinking that adding some healthcare back into my portfolio will be good in the long run, just in terms of diversification. And Johnson & Johnson, I was invested in them before. I had probably about $150 worth of value in it before when I sold, and I feel more than confident that I'll be able to get it back up there to that level. You can see overall we're up almost 2% for the past week in the healthcare sector. Obviously, United Health Group is leading that pretty good, but Johnson & Johnson just has some room to grow, and I'm sure that we'll see that happen. And the next category that we have is actually my restaurants category. I recently added Starbucks, and I'm not sure if you saw that or not, but I do believe in Starbucks. I think that their business model is really good, and I'm super excited to see kind of where things go with this holding. I bought it at a pretty fair value, and I really think that dollar cost averaging into these different holdings will be pretty beneficial. Obviously, you know how I feel about McDonald's. I really think McDonald's is like probably one of the best companies within the restaurant category. I think that their business model is really second to none. They're basically just a giant real estate company, and I really believe in them. That's why I continue investing even though I'm down week by week. And to my surprise, Texas Roadhouse is actually killing the game at the moment. We are up almost 5% in the past week in Texas Roadhouse. Super exciting. I know there have been a lot of talk for pretty big growth plans from Texas Roadhouse over this next year, and I'm pretty excited to see where that goes. I hope that it continues to rise. Obviously, you know, it is inevitable. At some point it'll start going back down. It'll fluctuate, but I only invest in companies that I believe will be going up in the long run. And last but not least, we have industrials. Obviously, you can see we are down almost 0.5%. I did add 2 new holdings to this portfolio. I added Waste Management and I added Lockheed Martin. I did have 3M and Caterpillar already in this portfolio, but I wanted to kind of just add a couple different stocks, test them out, see how they go. They have a pretty good track record. I think Waste Management is a Dividend Aristocrat or Dividend King, one of the others. But Lockheed Martin as well is a great company. You can see just in the past week, we're up almost 2%. Super, super exciting stuff. You can see if I filter this by the unrealized gain, the stocks that are doing the best at the moment are Wells Fargo, which I only have a whopping $23 of value in. But you can see Wells Fargo is up overall 20.56%, which is super, super awesome, which yielded me a whopping almost $4. ExxonMobil is another one that I was talking about having a really, really great return at 18% right now. Super, super good. Still hoping to keep that up. And the way that I'm getting these returns and trying to continue doing this is, of course, just by buying the dip. I wait for a prime opportunity. I do my valuations, which I have a video coming out on that relatively soon, so stay tuned. But I do my valuations, I do my analysis, and I make the decision. But the biggest key with all of this is just making a decision. If you don't make a decision, then you're going to be stuck, you're not going to be doing anything, and you're ultimately not going to get where you want to be. Let's go ahead and filter this to the worst performing, and that would be Home Depot. Very, very disheartening. I really like Home Depot, but it's been struggling. It's been struggling pretty bad. You can see we're down overall almost 8%. I'm still holding out because I believe in Home Depot, and I don't have a huge valuation within Home Depot, so I'm not super worried about it, but nevertheless, it does kind of hurt to see the numbers go down that bad. These are the type of situations where you really have to keep your emotions in check, and it's super, super important as an investor that you understand that this is for the long run. I'm going to be investing for many, many, many years, and I know, some companies will do good, some will struggle, but ultimately, I'm going to be trying to do the best that I can. I'm going to try to make myself as knowledgeable as possible because I believe in the vision. I believe in drip. And I'm going to show you guys exactly the progress of this portfolio and how we're going to go in the future. Now let's go ahead and look at the dividends that we made in the past week. On January 31st, we actually made 63 cents from BlackRock Science and Technology. BST, it is a monthly dividend payer, which is why it's so low considering I have a lot of shares in it. It is a monthly dividend payer, that's why. And then of course we have JP Morgan at $1.07. So super, super exciting. Obviously not a lot of money. You can see overall my portfolio yield almost 3%. You can see annually we actually made a pretty big milestone. This year, we are on track to make over $100. So when you think about that, when you actually put it into perspective, what we're doing here, what we're creating, I have $3,769 right now put in my investments, and that is allowing me to get over $100 a year in annual income. What could you do with an extra $100 a year? Could you pay a couple of your bills? Could you pay some of your subscriptions, Netflix, Amazon Prime, whatever you have? Could you pay some of those subscriptions? When you start kind of thinking about it like that, right now I'm currently making $8.86 per month on average. That is almost enough to pay my Netflix bill, which is super, super exciting. I really like to see this every single week. When I do this, I update this kind of chart, and it really is motivating for me to kind of keep track and see the progress, because watching this number right here go up is super, super motivating. You can see I have it all the way down here to an hourly wage at 5 cents, which is so cool. I remember I first started, it said zero. It said zero until I had like over $1,000. I was like, this is just great. But you can see now daily we're making 29 cents almost on average. And that's so exciting for me, guys. So exciting. But anyway, guys, that is going to wrap it up for this video. Again, I say if you would like to see the progress of this portfolio as I continue investing and chasing this whole passive income dream, feel free to subscribe to the channel and hit the bell notification so that you never miss an upload. And I appreciate each and every one of you watching. If you have any questions about the portfolio or have some thoughts of your own, feel free to drop them in the comments below. I generally try to respond to most of my comments, and I really think it would be beneficial to kind of get some dialogue going about stocks and investing in general. But anyway, that's going to wrap it up for this one. Thank you so much for watching, And like always, I will see y'all in the next one. Peace out.